Thank you, Mr. Chair, Co-Chair Baker, Co-Chair Pinto, committee members. Thank you for the time to present House File 2581. Research from the Federal Reserve Bank of Minneapolis shows that self-employment is one of the most important pathways to wealth building in our economy. For many Minnesotans, especially those in communities that have historically been excluded from traditional wealth building opportunities, entrepreneurship is not just an aspiration, it is a pathway to stability, ownership, and generational progress. But starting and sustaining a business requires access to capital, and our traditional lending system was not built with everyone in mind. Conventional lenders rely heavily on collateral, real estate, savings, and other assets, along with strong credit scores, operating history, personal wealth, and extensive financial documentation. Those benchmarks are deeply shaped by long-standing geographical, racial, and gender wealth gaps. The result is measurable disparity. According to a 2023 Small Business Credit Survey, Black-owned businesses are denied financing at nearly twice the rate of white-owned businesses. At the same time, banks and traditional lenders are highly regulated, including oversight by the FDIC to protect customers, assets, and maintain financial stability. That oversight serves an essential purpose, but it also limits flexibility in what institutions can fund and under what terms, particularly for startups or entrepreneurs without traditional forms of collateral. That is where innovative, mission-driven capital partners come in. Fortis Capital ensures that viable Minnesota businesses are not denied opportunities simply because the traditional system was not built for them. This bill supports that vision, not by replacing our financial institutions, but by complementing them and expanding the ecosystem of responsible capital available to entrepreneurs. If we are serious about workforce development, we must also be serious about entrepreneurship development. When we expand access to fair and flexible capital, we strengthen local economies, close opportunity gaps, and move closer to a Minnesota where success is determined by innovation and hard work, not by whether you inherited collateral. I thank you for your appreciation of this bill. I'll turn it over to Brian Smith, CEO of Fortis Capital, to talk more about the bill and the work that he plans to do.
Thank you, Chair Frazier. So, Mr. Smith, please identify yourself and proceed with your testimony. Welcome to you.
Thank you, Representative Frazier. Good morning, Chair Pinto and Chair Baker and members of the committee. My name is Brian Smith, and I'm the co-founder and CEO of Fortis Capital, a Minnesota nonprofit engaged in economic development finance. Fortis was established in 2019, and with our first loan being deployed in 2021. Our mission is simple. We bridge the gap through creative financing for entrepreneurs and our partners. We unlock access to debt capital for deserving Minnesota businesses that are systematically underserved by identity, geography, or lack of traditional banking access. Our vision is to ensure entrepreneurs can access capital regardless of who they are or where they live. The problem in Minnesota. Across Minnesota, thousands of small businesses, particularly in rural communities, communities of color, immigrant communities, and low wealth areas, are unable to secure traditional financing. Many are viable, revenue-generating businesses, but they are denied capital because they lack traditional collateral, lengthy credit history, generational wealth, or proximity to major financial institutions. When businesses cannot access capital, jobs are not created, main streets and business corridors decline, local tax base shrinks, economic disparities widen, communities become unstable and less safe. The issue is not talent or work ethic. The issue is access. Our solution, how Fortis works. Fortis Capital partners with community organizations, financial institutions, and ecosystems leaders to deploy innovative financing models that make lending possible when traditional underwriting says no. We structure flexible debt products, leverage partnerships to reduce risk, fill financing gaps that banks cannot, and unlock growth capital for scaling businesses. Our approach does not replace banks, it strengthens the pipeline into them. Every loan we structure represents a business stabilized, jobs created or retained, wealth generated, locally a stronger Minnesota economy. We don't provide grants, we're providing responsible capital that circulates multiple times within our communities. Specific products that we have are listed in the packet that you have, and those products have done the following. We respectfully request $1 million in state investment to expand the following. Increase lending capacity in underserved regions, de-risk innovative capital structures, expand partnerships statewide, and accelerate small business growth and job creation. With this investment, we will unlock significantly more private capital alongside state dollars, multiplying the impact of this appropriation. This is catalytic funding, not static funding. This request directly advances workforce development, small business growth, rural economic vitality, leveraging dollars that would otherwise be inaccessible, closing racial and geographic wealth gaps. And if you also look in your packet on slide 4, you can see the impact that Fortis has had over the course of our lending history. And just to highlight a few things, and I'll wrap up, is on slide 6 in your packet. Since deploying our first loan in 2021, we've given 37 loans at over $4 million from Fortis, leveraging another $29.5 million, created 314 jobs, and those are a mix of full-time, part-time, and seasonal jobs because of construction and economic development finance through construction and building new buildings. And overall, it's been we've been able to leverage 7 times the amount of money that we have raised ourselves by partnering with other CDFIs, banks, and other community institutions. And with that said, I will stand for questions.
Okay, good. And you see you got another testifier there, but just for questions, or were you going to testify? The other testifier. Mr. Smith?
Chair Pinto.
Yeah?
Next to me is the Chief Strategy Officer for Fortis Capital.
Okay.
And she's here in case there are some questions that I can't answer because I can't remember everything all the time.
No, good. That's why you have a team. Before we go to questions, we'll just see, is any member of the public wishes to testify on this bill? And not seeing any, we will move to member questions. Are there questions that folks have? I'll maybe ask one, Chair Frazier and testifiers, just can you talk about how this would fit into the other programs that we have regarding economic development and underserved communities? I guess I'm thinking there's several examples, but just can you kind of, how this would fit in the ecosystem of other funding we have, if you have a thought as to that? Chair Frazier or Mr. Smith?
Go ahead, Ms. Smith.
Mr. Smith?
Chair Baker. So Fortis Capital we provide gap financing. So a lot of the partners and a lot of the people that the legislature have funded over the years, like MEDA, NDC, African Development Center, other people that you've given funders to who are community organizations, they still have a lot of underwriting that is closely tied to bank financing in the same type of stringent underwriting rules and a lack of flexibility. And so a lender may come in and a borrower may come in and need $600,000. Sunrise Bank can give them 4. NDC can give them 1. And then there's still that gap, even with the equity that the borrower is bringing in. And because of the lack of flexibility that's allowed at a bank or at a CDFI, Fortis can come in with much more flexibility at much more favorable rates, fill the gap, and that way loosen the rest of the money up. Because if you need $600,000 and you can only get 4 or 5, the deal is off unless you can get the other $100,000. And that's what Fortis Capital over the years have always come in to be able to make deals possible where they wouldn't be possible because of the amount of risk that we're willing to take on a deal where other people just don't do it.
Okay, I may have a follow-up question about that, but I see Representative Greenman has a question. Representative Greenman?
Thank you, Mr. Chair. And this may be a question for Representative Frazier or Deed, and I really appreciate, I think we've heard a lot about making sure that we have gap financing and making sure that we have working capital, particularly as it relates to communities and populations that have not had access. So I really appreciate the work. I guess I'm wondering how to follow up on Chair Pinto's question is, are there at Deed, as we think about this broader gap, are there competitive grant programs that offer this kind of this kind of funding as we think about a transition away from named grants in some cases to making sure that DEED has this in a competitive program. I'm wondering, do you know that, Representative Frazier?
I do not know that off the top of my head, so we may need an agency.
See if we can have Mr. Bowdry make his way on up. Okay. I think just get a spot for him. Yeah. Welcome.
Thank you, Mr. Chair, members of the committee, Devin Bowdry, Government Relations Director at DEED. I would have to probably know more about the details of what Fortis wants to do as compared to our programs, possibly something like Emerging Entrepreneur Loan Program, but that's the only one that comes to mind.
Representative Greenman.
Thank you. And I think that the goal here, and just as we think about our agencies who are managing and spending hundreds of millions of dollars on this, making sure that as we are appropriating resources, it is all working together. And I think the agencies and the government have a role to play in it. So I'd love to hear more about if there is funding sources for this kind of work and the kind of organizations like Fortis that are coming and asking for us. So that's sort of a follow-up as we think about a budgeting.
And Mr. Bowdry, just don't leave, 'cause I may have a question, although Mr. Smith looks like wants to say something. Mr. Smith.
Yes, Chair, committee members. Fortis is a part of 3 different programs at DEED, well, 2, and 1 application is in process. But we're not eligible for grant funds from DEED. But what we are is we're part of the participation program, and we're also a part of the, I always miss, it's so many acronyms.
Yeah.
But
They really are.
the other program is one where the DEED guarantees a portion of the loans up to 80%.
Okay.
And so we're part of both of those programs, but we weren't eligible for any of the grant programs because the grant programs are for developers who we lend to.
Right.
And so we can point them in that direction, but we're not eligible for the grants ourselves to give to clients that we work with.
Mr. Smith, do you know what makes you not eligible for those grant programs? When you say you're not eligible for the existing grant programs, do you know what, is it just, what is the reason that you're not eligible?
The grants go to the actual businesses,
Oh.
the borrowers. And
Okay,
so
right.
we're not eligible to receive the money, but we point our borrowers in those directions so that they can get pre-development grant dollars from DEED and other places.
So it does seem like a gap. So you're saying you're not aware of grant programs. Sounds like Mr. Bowdry isn't either, although maybe something to look into, Mr. Bowdry, that there are programs for the kind of work that you're doing and some of the other lenders that you identified, who I think in most cases are receiving direct appropriations. There's not a program to them, to those lenders is what I'm hearing. Yeah. And yes, Mr. Bowdry, definitely something to be looking into on behalf of the agency. As long as this topic has come up, just noting that the governor had announced an intent to prohibit direct appropriations without an RFP. I think that, well, I know that Chair Baker and I are both on record as being opposed to that, having significant concerns. Our Senate counterparts significant concerns as well. But having said that, still, Chair Baker and I are both interested in certainly trying to move in the direction of having more competitive grants, even recognizing there are some circumstances where direct appropriations are appropriate in my view. So anyway, this is something we need to be looking into. Representative Greenman, did you have something else? I'm sorry, no, you're all done. Okay, Representative Zalesnikar.
Thank you, Chair, and thank you for the presentation. My question is, what is the interest rate for this type of gap financing for the business owner?
Mr. Smith, it's Representative Zalesnikar. Mr. Smith, you're gonna answer? Or?
Yes.
Okay. Yeah.
So the highest interest rate that Fortis has ever had has been 8.5%. And that was on a bridge loan. And the lowest that we've had, as you can see in the packet, we have a 2% interest only product, but on average, we're around 6.5%. We always try to come in at least a point or two below the bank financing or the CDFI that we're partnering with. And in most cases, there's a bank financing with a CDFI, and they still need us to come in and fill the gap.
Representative Zalesnikar, follow up? No? Okay. Chair Baker.
Yeah.
Thank you, Mr. Chair. You're taking the riskiest of the risk, on that transaction, and thank you, because again, I couldn't have done my first business 25 years ago without having sort of another bridge loan back then with the Initiative Foundations, and again, it's similar to that. What has been since 2021, you had your first loan, what has been your default rate from that point?
Mr. Smith?
Chair, and Chair Baker, we've had I'm sorry. Sometimes I always forget.
No
There have
problem.
been 32 loans to date, 37, I'm sorry. And we've had 2 defaults since deploying our first loan in 2021.
Great.
Chair Baker?
Mr. Chair, thanks.
Yeah.
Is this the first time you're requesting money to kind of seed this revolving loan fund? Is the intent to sort of, tap into this so it's kind of a revolving loan? Is this your first time you're requesting dollars from our general fund?
Mr. Smith?
Chair Baker, this is the second time that we've requested funds. The first time we received $300,000, and that money's been deployed. And we have, and sorry, what was it was 2 parts to the question.
Chair
We
Chair
definitely-
Baker?
No,
Oh,
that
and it
was
is
it.
a revolving loan fund.
Yeah, right.
So it's a revolving loan fund, and we use some of the interest to support operations.
Sure.
And the legislature has allowed us to have 20% of whatever the appropriation is for operations, but the money just keeps revolving over and over and over. And so we try to have our rates at our terms at between 7 and 10 years so that money can come back, help people look for refinancing so that we can get our money back and redeploy as soon as possible.
Thank you.
Chair Baker? Okay, yeah. And that was actually a direction I was going to go, that if you're taking on loans that others won't, then presumably they're riskier. There's going to be a presumably higher risk of default. Sounds like you're doing a good job assessing, but part of the idea is to take on more risky investments. So we'll see if there's anybody else. Not seeing any, so Chair Frazier, to you, sir, for final words on your bill.
Thank you, co-chairs, and thank you, committee members, for the robust conversation. I believe here that Mr. Smith has answered the questions quite well and shown that there is a need for this. And I believe we're in the business of solutions for entrepreneurs in our workforce and our economic development, and so I'm looking forward to support for this bill.
Good. Thank you so much, Chair Frazier, and to your testifiers for your important work. With that, the chair lays over House File 2581 for possible inclusion in a budget bill. So we'll see where we end up.